How much profit did Barry's have? Say that again, Nikki. $22,597.80. Now that means that their sales exceeded their costs and expenses, or their credits in the earnings category exceeded their debits by that amount, $2,597.80. Okay? What do we have to do with that $2,597 after we calculate it? Yeah, we had to make sure we carried it over into the capital section under net profit in order to balance the assets with the liabilities, accruals, and capital. Now, another thing I wanted to point out with Barry's Gas and Groceries is that this is the first month of Barry's operations. Quite frequently, when you're just starting a business and you have a lot of upfront investment, particularly for equipment or for supplies or for legal costs or whatever it is, it's expected that for the first little while you're going to have a loss. Okay? Some businesses more so than others. Some of you are thinking of doing freelancing and accounting. Very little cost up front. About the main cost is buying a computer. You're going to have to buy some paper. You'll want to get some business cards, but you get one client, you can typically cover that, okay, in the first month. So not so much in the bookkeeping business as in setting up a business where they have large equipment outlays, a lot of purchase of equipment. So anyway, Barry's didn't have a lot of that. They had a profit up front. That's good news. Let's look over at the balance sheet for a minute. How much did we have in total assets? $39,156.80. Is that after subtracting the accumulated depreciation?
Yes.
So we could go through and by connecting those two, how much? What's our book value?
83.
Yeah, $983. Now you don't see that number in there because it's a calculated number, isn't it? It's taking the original cost, subtracting out the depreciation to date. What about for the machinery? What's our book value? 98. Say that again, Tina. $9,833. Okay. So now we've added the book value together to come up with the current assets, and we've got $39,156.80. How do we calculate the total current assets? We just add those up, right? Did anybody do that by chance? Let's go ahead and do that right now and just write it over to the side there. Just add up the total current assets and put it over at the side. $28,340.80. Okay, what are our current liabilities? How much are they? $65.59, because all the liabilities that we're showing on our list are current liabilities, aren't they? So how much working capital does this company have right now? $21,781.80. How did you get that, Nikki?
I subtracted my current liabilities from my current assets.
Very good. Okay. Current assets of $28,000 less current liabilities of approximately $6,500 gives you about $22,000 in working capital. Do you see that? What about current ratio? How do we calculate that? 4.3 to 1, right? Which means that our current assets are 4.3 times our current liabilities. Is that good?
Yes.
What's the yardstick we use? 2 to 1. It's better than 2 to 1. It's twice as good as 2 to 1. So that's great. Now, if next month it's 4.5 to 1, that shows a gradual increase, and that's what we like to see. If the next month it's 5 to 1, again, that's better. If the next month it's a 2 to 1, we know we've got a situation we've got to arrest fairly quickly. Okay? And so we'll talk about those later on, too.
This concludes Session 2.